Hello everyone, welcome back to the episode 2 of me documenting my road to $1 million on YouTube. This is another week actually. So although this week we've already started exam, I'm writing my exam, so I did not really catch trade really like that. But on Monday, this is my first trade on Monday. This is my first trade. The first trade I took on Monday was on CHF JPY. Was on this guy. So the reason why I took this loss is because I wasn't following the other flow. I'm not following the other flow on 50 minutes time frame. When I shrink out, the overall trend of the market is bullish. It's very, very bullish. It is bullish. It's very, very obvious. And I can see that price just created this impulsive. So I was expecting a correction, then another impulsive. And the reason why I even took this trade is I was seeing a level of liquidity right here. There's a liquidity right here. There's a liquidity, and then there's a demand zone right there. That is why I set my limit order, and price just tapped me in, then straight to a sell. So the reason why I lost this trade is even if I want to enter this trade, I should wait for market to displace this high. So something like this, then a pullback, then I'll be able to enter from here, then mash it up. But I'm just catching a falling knife during London session, and I know that during London session this guy always move like crazily. So that's the first trade on Monday. On Tuesday was on Euro USD. And just opened this pair, and I was like, let me just trade this pair today. Although it's not my pair, I don't trade Euro USD, but CHF JPY, USD CHF, those two pairs that I trade, they are not aligned with my strategy. So I was like, and I want to trade that day. So I go to Euro USD, and I saw this setup. So when I first opened the chart, I went over to the 4-hour time frame. That's my first thing I do. So on this 4-hour time frame, the overall trend of the market is very, very bullish. The structure of the market right here, because this was the high that break this low. Now price came back there, and then it took out this high again. So the low that took out this high was this low right here. So far we are still inside this low and this high. For me, the market is bullish because this was the low that changed character that break this high. So all what is happening inside here is just rubbish. So when I woke up, I saw price somewhere around this place. I bring my GAN box, and I draw out. I found the 50%. I can see that price has already retraced to the 50% level, which is this place. Price has already retraced to the 50% level of these swing moves, of this swing from year to year. So price has already retraced. So I'm expecting something like this, then boom to the upside. So I can see that price is at 50% level. All what I want to be seeing is buy. It's another discount zone. The price has already touched the discount zone. Then what I want to be seeing is buy. But when I come over to the 15 minutes time frame and look for my entry. I want to buy. I've already know the directional bias. Now where is the available liquidity and where is my demand zone? That was when I drew out this level out. Let me recap. So there's a liquidity. This is a low that's created this high because it broke its own high. So if anything should come and take out this low, then that's the liquidity. So I mark out this level as my liquidity. Then where is my level of demand? Where am I going to buy from? Then I saw this imbalance. I can see this imbalance. There's an imbalance here, and then there is a demand zone right here. Had it been there's no demand zone right here, I will have waited for price to take out this low as my liquidity sweep, print out a bullish engulfing candle, then I'll be able to enter from here. But since there is a low, there's a demand zone right here that I can just place my limit order there, it's okay for me. Then I took this trade, place my limit order right here, and then boom to the upside. That's my first entry. My second entry is when price started going bullish. I mark out this immediately. Price rejected from this level. I mark out this other block again. I mark out that other block again. Then I place another limit order right here, and I entered again right here. Again, place my stop loss below like this. Then I take profit to the same high. So that was how I caught this trade on Tuesday. On Wednesday, I come back again on Wednesday, and I can see that the trend of the market is still bullish. So what I want to still be seeing is buy. What I want to be doing is buy. I saw market somewhere around this place. So this is around 1 o'clock in midnight, down 2, 3. So I've already analyzed the market down that okay, this low break this high. So if price immediately price break this high, this low take out this high, this low has already become a liquidity. So I make out that liquidity, then there's a demand zone right there, then I draw it out, then I slept off. That's around midnight. So when I wake up, I saw price somewhere around this place. Price has already tapped me in. I did not place the limit order because that's my rule. I only place limit order when it is 6 o'clock, maximum 6 o'clock. So I did not place limit order. So I saw price somewhere around here. Immediately I saw price somewhere around here. Price has already swept liquidity, tap it to my zone, then it started going up. I mark out this level out again that okay, I'm going to use this level to buy. Then I place my limit order right here. Then my stop loss below this level. Then I take profit to this high, to this last high. Only for me to come back and then see price has already moved in my favor without even tapping me to my second entry. But my first